Hi, this is Steve Schwartz with the RQ TradeLAB review for the day of November 1st, 2013. I'm with my partner, colleague, and friend, Edward Preston, who is the head trader and moderator of the TradeLAB. The purpose of our TradeLABs, EDU workshops, and IQ trading room is strictly for educational and instructional purposes. It's not a trading advisory service of any kind and should not be construed as such. Past results are not necessarily indicative of future results. How are you, EP? How'd you do today?
Doing good, man. Thank you very much, Steve. Starting off the new month. Here it is, November 1st, and you know, it's a Friday. Everyone's happy to have a Friday, and let's see what the markets gave us today. Here's our benchmarks, S&P on the left, Treasury notes on the right.
Just give me one moment, EP.
Yeah, no problem.
I read the disclaimer. I want to show it, and now I'll bring it back to you. Yeah, I'll bring it back to you. There you go, EP.
Got to keep the compliance gods happy.
Yes.
All right, so we got the S&P on the left, Treasury notes on the right, and I got the different stages here, Mark. You can see we started off mixed. We actually were mixed, guys, until from 8 to 9:30 for the first 90 minutes today. It was a pretty quiet session looking for any currencies, any index trades. So we had our eyeballs on other markets specifically. We looked at the grains, we looked at the metals, we looked at the natural gas, some of the independents. But for 90 minutes, there was nothing to do here. We broke at 9:30. That's pretty obvious why. That's when the stock market opened up. And we got some volume. So again, take note here, the treasuries have stayed in the bear zone the entire day. The S&P, not the case. It's been every which way today. We identified at 9:30, that's when we need to go do something, 9:30, right? So I'm going to take you guys over here to the left. This chart represents the Nasdaq. The Nasdaq at 9:30, I'm going to paint that. This is when we had true risk on. Now you can note here, I went in early. I anticipated, which is a higher risk. I anticipated getting in early because the Nasdaq and the S&P were both right there teetering at the bull. I want to take you over to the S&P one more time and show you when I got in at 8:35. What was the S&P doing at 8:35? Let me show you right here on the left. 8:35 is going to be this white line. Well, let's move this guy over. There's 8:35. Look what the S&P was doing. It looked like we were going risk on. Didn't have a true confirmation. It closed right at the bull. But that was enough for me to identify which was the Nasdaq, to buy the Nasdaq. It was the leader. Look at all the blue candles. That's identifying strength. The yellows are identifying weakness, or not weakness, I'm sorry, but just neutralization. We broke, and I had to endure the pain of just watching this thing until 9:30 for almost an hour, sitting there waiting and waiting and waiting and waiting, and then we got the pop. Stock market opens, got the 75% target on two. I actually did 3 units here, took $180 out on 2 of my 3. I could have taken out at the top. We had a ISM number that came out at the top this morning. Could have taken more money off the table, but you can see I actually went pretty conservative, locked in, made sure that I didn't lose anything, and I'm going to squeeze this down. You'll see that that was my last target. That was more or less a break-even target, locking in enough to cover commissions. Market then surged just for 1 bar, and now you can see where it's at. It's testing the bear zone. Of course, you got 30 minutes left. Not interested in selling the market today because that would be conflict. Tougher chances, probabilities are much lower for me to make money in conflict. So that was the Nasdaq. The only other trade I did was here in the gold. Gold, during all of what I just explained to you, let's see what happened here. Well, remember I told you we were in conflict, or rather not conflict, but mixed. Why we were mixed, if we didn't get the break at the open, I was looking for gold to fail, and it did. This is an RQ channel trade. Broke down. I showed all the folks here the wedge that this market was putting in this morning, just over the course of the first hour of trading. Broke through. It took a while, though. Took the another report. It took that ISM number at 10 o'clock to come in to get this market to fail, and that's exactly what happened. Quickly grabbed a 50% and a 75% target. Could have waited for the bottom. Woulda, coulda, shoulda. Didn't grab the very bottom. Don't always grab the bottoms of the markets, but a nice trade that was worth, I think we did the math on that. That was about 380. So about just shy of $600 on 2 trades. here in the TradeLAB this morning. This is based off of a $25,000 account, and that takes care of the week here in the lab. Look forward to having you guys all here on Monday morning. We'll do it all over again and find out which market's going to be the highlight for us next week. And as always, we enjoy having you guys here in the TradeLAB. Thank you very much.
Thank you, EP. Much appreciated.
Yes, sir. All right, guys, so have a splendid weekend. Steve's going to take over, take you guys to the top. Steve, you might want to shout out if you've got a workshop this weekend or when the next one is. I was talking to people about that.
Yes, I'm going to do a workshop tomorrow starting at 10:30.
Cool, 10:30 Eastern, right?
10:30. People that want a link to it, it's for members or trial members only. If you're in the public and you haven't taken a trial yet and you want to get a sense of what the workshop is about, email steve@riosquant.com. I'll put your, I'll give you my email address here, and we will honor that request. But really, basically for members and trial members only. We'll do some review from today's trading as well as touching on the RQ channel, Nasdaq, and the RQ Tech in our three-step sequence. So thanks very much for attending, guys. I'm going to come back. This recording has now been completed, and thanks so much, EP, for the review.